Disclaimer before we begin, Master of the Markets and ASX Trader is a corporate authorised representative of ShareX Australia, and this information provided is for general educational purposes only and does not constitute financial investment advice. A little bit about me. I've got a Bachelor of Education. I was a primary school teacher for a very long time. I'm a certified financial technician through the International Federation of Technical Analysis and a certified level 1 through Elliott Wave International. All right, let's get into it. Hi everyone, thanks for tuning in. Today's video is proudly sponsored by Moomoo, and I just wanted to officially announce that we have a major partnership with Moomoo. And one of the exciting things about that is you may have seen that we have just launched our new app and our new academy community that has been rocking and rolling. And I know the students at Master of the Markets have been absolutely loving it, but we've got an exclusive offer through Moomoo that if you sign up using some of these details, then you'll be able to unlock 1 month free, valued at $249. So I just want to talk about why we chose to go with Moomoo over any other broker. It fits a lot of our criteria that we were looking for, and I just want to explain what those things are. So one of the main things that was a non-negotiable for me was that it is CHESS sponsored. Okay, that ensures that your investments are secure. So if for whatever reason Moomoo would to go under, it would not matter. You could just transfer your stocks to another broker because they're in your name, not in Moomoo's name. It's not like crypto where if an exchange goes under like FTX, you lose all your coins. It's no biggie. You just transfer them onto another broker. Not that that's going to happen anyway because they're backed by 32, which is a NASDAQ listed company anyway. So nothing to worry about on that end anyway. But CHESS sponsored is definitely always something that I definitely must have on my broker. So tick number 1. Next thing that we love is that they have extremely low brokerage fees. Okay, just $3 trades for Aussie stocks and only 99 cents for US stocks. And these rates are amongst the lowest. I know I'm personally right now with CommSec paying $20 on the way in, $20 on the way out, sometimes up to $30 if I'm doing a larger trade. So that's $60 in total for a trade, whereas here it would only be $6. So it is one of the cheapest in Australia, and if you're doing a lot of trades in and out, then $3 is extremely cheap for Australian stocks, especially ones that are CHESS sponsored. So that was my other tick. And then the other one was that they do Australian stocks and US stocks, so you can get access to Australian and international. And that were pretty much my main checklist items. So if this is something you're interested in, there's a great offer right now as well, where you get up to 12 free stocks when you make a deposit and meet the minimum balance requirements for 30 days. On top of that, like I said, you'll also get access to MTM Academy for 1 month free, valued at $249 plus GST, include GST. And as well as that, you also get your first month brokerage free on all ASX. So you can go absolutely gangbusters for your first month of trading, make 1,000 trades, and don't pay a cent for your first month as well. All right, if this is something that you're interested in, I'll show you exactly how you can do it now. Okay, so the first thing you need to do is come to our website, which is www.masteringthemarkets.com. Link will be in the description as well. You can type it in Google and find it as well. Make sure you've got the correct one. So from there, you'll see at the top here, MTM Academy is now live. Get your first month free. More info. All you gotta do is left click that and it will take you to the Academy page. These are all the things that we offer at Academy. If you want to read around that, one of the really cool things are these 2 live trading sessions. So, you're just amongst other traders every day, multiple times a day, seeing lots of things. On top of that, we have the different options, which I'll get to first. But before I go there, look at the timetable that we have here as well. So we offer everything from Tung, who's a macro analysis specialist worth over $10 million, made his fortune on things like Bitcoin and gold, stuff like that. All through macro investing. You've got my weekly outlook, which is where you probably always notice it's each week I look where the surf's hot. Okay. If it's in uranium, like I identified a couple of weeks ago, it's in uranium. If it's in crypto, it's in crypto. If it's in lithium or that, I'll identify it and find it that week. And that's what that is. I look at all indices, all sectors, all commodities, crypto, etc., and we find out where the surf's hot that week. Frank here, you probably heard of Frank Watkins. He's been trading for over 60 years. The guy, myth legend, one of my people that I looked up to. He was a mentor of mine back when I first started. CEO of Pro Trader. He does analysis using his Pro Trader software on a Monday to look for opportunities for stocks as well. Then you've got Craig Dixon, our fundamentals specialist. He unpacks certain individual stocks and talks about why the balance sheets or whatever things are looking good on the FA. And this is where we kind of get that Captain Planet. He's FA with my TA, what's looking good. And that's how we were able to find some really good opportunities last year. Then on me on a Wednesday at midday, I do a weekly trade where I go through my trades, get inside my head, my psychology, why I'm looking to enter certain trades, where I'm looking to take profit, why I'm looking to take profit there. So just to really get inside a professional trader's head and see exactly what I'm thinking, how I'm finding the opportunity, which typically links back to the weekly outlook. So I know where to look. I talk about how I've dive deeper and taken it from there. Jonathan, all around time cycles. He's a specialist in GAN. He's been doing it for over a decade. Very big on things like the real estate cycle, and he teaches all things around cycles. All right. So, we have a cycle, animals have a cycle, the weather has a cycle, financial markets also have a cycle, and nobody knows it better than Jonathan. Craig Tapping on a Thursday, I might call. What he does is he unpacks the macro outlook in a deep dive using TA, FA, macro. I personally know he spends about 3-4 hours preparing for that lesson every single week. And I've heard that the cost of tuition just for the courses are worth it just to attend that Thursday call there. So amazing stuff there. And then we also have special guest speakers on a Friday as well. So industry experts, these aren't every Friday, but whenever we do book them in, we don't want to just chuck someone in there for the sake of it. We always want to make sure they're quality people, and that's what they're about there. Alrighty. So if these are things that you're interested, there are 3 options. You've got MTM Academy join free. So we have a free section. We have a paid section, which is $250 a month. And then we have the section for the students. Okay. So what I'm going to do is go in and show you the difference between the free and the paid one. So then you can kind of choose from there. So if we go into Academy, let's go to the free one. So this here, general community, in the free section, you'll get everything down to here, down to Academy. Okay. So you'll get everything that I post on social media out there, I put in this one here. The beautiful thing about that is you can actually set notifications for that. Okay. So you can actually come up here and you can customize what notifications you want to see in what spaces. Okay. So you can go in and you can go, yep, the Craig Tapping ones I want on in-app, email, or mobile, so you never miss out. ASX Trader charts, you can go, yep, I won't, so you never miss out on my thing. You get your notifications. So that's the best thing about coming into the app here and doing it here. So events. So we'll have certain events in here as well. General discussion. This is just a chat, just like Facebook Messenger. We have a library of resources that we're going to accumulate and add in there as well. Laugh Out Lead Memes. This is Tung's favorite one where you can come and have a laugh and missed the ring. That's the library. Come and have a laugh a little bit. Public charts is probably the most powerful one for the free section. So you cannot post something unless it's got a chart. All right. So you're getting all the MTM students and whoever's in there that wants to post and you're getting quality info that cuts out all the noise from there. That one. So that's it there. All right. So that's the free section there. We will host probably those special guest speakers you actually get in the free section as well. So if you ever want to join any of our but this is the Academy here, which is where you can start to see. We can talk about everything, crypto stocks, US stocks, commodities, Forex. It's all in there. Each educator has their own chat. All right. So you can come in, people can post whatever it is that they're looking at. If they're seeing things and talking about, I've talked about from that core lot, why it's looking good, etc. Oil, possibility of things like that. Silver, and I talked about this just before, silver stepping in here than it did. So just going through each kind of thing on there and seeing why it could step. So just getting in front of it. So each educator has their own chat where you can see what they're posting. So that's part of the paid section, but the main thing you're getting from the paid section will be the events. Okay, so in the events, each educator has a call, which I showed you before, These are the live trading floors we talked about. So Craig Tappin. If you want to go to Craig Tappin's call, use RSVP. I want to go to all of them because I love Craig, and you'll get your alerts for it. But this is the call where it is here, and you can just join the call whenever you want. If you ever want to watch any previous ones, you go into past here, and all the calls from the previous one are just in here. So if I want to watch my call from today, you just come in. There's a bit of a AI summary around it, what it's all about, and the call is available within 2 minutes.
There we go.
And
yeah, they're trying to time every little zig and zag. I'm like, in here.
All right, there's me chatting about some there. All right, so the videos are all in there. AI summary of every single one as well. So that is then the paid section. All right, so depending on what you're after, I definitely advise come and at least sign up to the free section, because why not? It's free. You download the app, which the link will be back on here. Okay, you'll be able to download the app, and then from there you can then at least get access to all the charts. But if you want to dive deeper, you want to start, following some professionals, getting some videos, really interacting, getting a bit more interaction with the other members and their charts. These are all mostly trained MTM students, that have done the 12-month course, etc. So lots of little mini-me's out there. This is how I kind of can find lots of opportunities, especially that Wednesday midday call, because they bring things they're looking at, and then they get me to look over it. So things like that, which is really powerful. So if this is something you're interested in, last part, just come on down. You've got if you want to do the Moomoo offer, you can claim the offer here. Click that claim offer button there, and that'll bring you to the link that you follow this step by step. So exactly what to do, how to claim it. Do this, do that, All right. If you don't want to do the Moomoo offer and you just want to sign up, then come on back here and you can literally just do the sign up here, and it will take you straight to the payment plan where you can start getting in as well. So either way, they're your options. And if you don't want to do any payment, want to join the free section, then that's there for you guys as well. All right. So just wanted to, super excited to announce that. Wanted to finally share. I've had lots of questions around it. So it's finally amazing to be able to actually announce it, that it's ready to go. And yeah, can't wait to see you guys inside. So before that, let's now dive into what I'm seeing this week. Okay, let's look into the charts here. And I'm going to start off with URA, because I did talk about uranium last week, which did have a really good run last week. You can see here, we've had this nice run here from last week. What were we looking at Tuesday, which was here? Okay, so we've had a nice push up on uranium. And we are now at, I guess, the first possible resistance zone. So if we look from the recent move down here, this is where we had the last change of market structure. Okay, so then from there you can see zig, zag, zig, zag, zig. And then from there, you can see we've changed market structure back through this major support resistance. Okay, I do like that we didn't sell here, that wherever this pivots, wherever it's here a little bit higher, it's going to be higher. Okay, but what we don't know is, have we just gone into the zag zone here? Okay, so here is your possible rejection zone. In particular, isn't it amazing how the 618 happens to align with the major support resistance? Okay, and then if we start bringing down our trend lines, etc. as well, you can start to see where there's an army of bears waiting to fight right there. We've got decline coming down, horizontal support, and the Fib 618. So can you see how when we start to get through that level, all of a sudden things will start to look a lot better, $27. Okay, so anything below 27, I would expect sellers to come in here. That's fine. That doesn't mean it's bearish. It's just where I would expect them to fight. Be very, very surprised if this just kept coming up straight through there. So what that means is you're expecting them to reject here. What happens after that is what's important. So what we needed to do is, once it comes down, we need the buyers to come in higher, and we don't want it to fall below here. So now we just reverse engineer and we predict the movements already. So once it does reject around that zone, what you'll then notice is this zone here, which also, funnily enough, the 618 happens to align with this major support. So this is what I'd be expecting to happen, something like this. And it just means that we cannot fall below 2250 coming back. Because if we don't buy off the zag zone here, then change up through here, then this is not the beginning of a new trend. That's not a change of market structure. Also, why aren't we buying off the zag zone, which also happens to align with this major support? Why aren't they buying here again? Okay, so this is what I'm looking for. If this happens, this will be what's called a non-phase swing. Why they're selling higher, why they buying higher, and then we can change market structure through there. Once we do that and we bounce off here and change through there, then we've changed market structure through major support, through declines, and we've actually got our official reversal. Okay, so a lot of good early signs, but it's way too early to be like, yep, we're in Uranus moon, we're going to the moon kind of thing. So right now, this could just be we zigzag, zigzag, zig, we zag, and it can be continuation of the trend. Okay, so what we needed to do is reverse and change market structure here, get up through there, then things are looking really, really good. Reason why I'm even eyeing off uranium is mostly because of energy, okay, which I talked about in my recent article. Okay, so my recent article I dropped yesterday was all around where to invest for the next 10 years. Okay, and it's talking about how everyone's, best performing asset of the last decade, Bitcoin. And as I've talked about before, history very rarely repeats because the macro environment always changes. And actually history says over the last 60, 70 years that whatever was the best performing asset that decade won't be the next decade. Okay, and that's what I ended up talking about. And one of the things I talked about in that article was, can you see here how when energy was in a raging bull market, tech was in a bear market? And since technology has been in a raging bull market, energy has been in a raging bear market. All right. They have pretty much an inverse relationship, not perfectly, but as you can see, pretty darn T. So as we know, technology is very overheated. I've shared that many times. We know we've got, Shiller P ratios through the roof, Buffett indicators through the roof, at major resistance, at divergences. We're in the excess phase of the NASDAQ, whether or not it's topped or we've got a little bit more to go. You're within 12 months of the top. Okay. So from that means for a long-term outlook, knowing that this thing has been correcting since 2007. So energy has actually been in a bear market while this has been in a bull market. So while we've had this major tech, and it's because money has been cheap. When money is cheap, growth thrives. That's where the NASDAQ thrives. Energy doesn't thrive in that environment. However, energy thrives in an inflationary environment. All right. So when here, that was our raging bull market that we had here in energy. It went from 2000 up to 20, it 10x. Okay, so that's what I'm looking for now. And the fact that we were here, majorly oversold, we got a good bounce. We were here, monthly, also got a good bounce. We're here again, monthly, extremely oversold. Okay, let me now dive into that a little bit further. So just a couple of little things as to why I talked about here as well is because of the energy from AI. Like everyone's really big on the AI theme. What they don't realize is, that's like being really bullish on a Game Boy, but then not on batteries. Well, Game Boy needs batteries in order to work. So that's its energy source. If you can't have energy, then you can't use the thing. So people are really bullish on AI. Energy is what it consumes, and a lot of it. And these are the predictions of what it's. So right now it's 3.5 hours. Yep. You're looking at 3 times the amount of energy there for it. Okay. So yeah, just talking about that. And as you guys always hear me say, I skate to where the puck is going, not where it's been. Yeah. I don't care what's made money in the last 20 years. I care what's going to make money in the next 10 years. Again, it's not always what's made money in the past. It's going to be good in the future. Okay, so looking at the energy one, like I said, we are on the monthly getting extremely oversold here. So I don't know if it won't happen right now, but I know like this is why it's drawing my attention to be here. It's really oversold, really unloved. No one is talking about energy right now. Good, that's what I want. Okay, so I know we're extremely oversold on the bigger time frame. Then when I move down into the weekly, We were really, so what I'm looking for here is I'm looking for divergence. So see how we haven't had any yet? So what I want to see is this come down and do a double bottom or a new low, and then this print a higher low. Okay, if I can get that, so that's why I'm looking at it over the next kind of 1 to 2 months. So these are weekly candles, 1, 2, 3, 4, 5. I want to see it come down and double bottom or a new low, and then this to not do a new low, do a higher low, and then I'll be monthly oversold. I'll be weekly diverging, and then when I go into the daily, I'll show you what I'm looking at. All right, so from here, can you see here how, again, we've been trending down like the whole way, trending down. We've had this really rapid move here. So you can see zigzag, 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 and we're going on. Okay, and you can see this is just going down in a very clear trend, etc., like that. What I want to do is show you how I can really use the RSI to not only predict what's going to happen, but predict what could happen in the future. I always talk about, I use this as a leading indicator. Most people only know how to use 1/4 of RSI. Actually, most people only know how to use 1/10 of it, which is oversold and overbought. Then the only other thing they know is how to use regular divergence, which is, again, one piece of the pie. I'm going to show you now how you can use it to look at what's been going on here. Have you ever wondered why divergence doesn't always print a bottom? Okay, so from here, you can see we put in a new low, but we've got a higher low, which is bullish divergence. People that only know that one piece of the pie would be screaming, the bottom's in, the bottom's in. All right, and that's what happens. It bounces, but bullish divergence can mean a bounce into the zag, not so much bottom. So then what you then do is from that last pivot, you get your fib retracement, and you are looking for then zag zone. Because divergence is not played out until it moves from divergence into convergence, which is where it stops diverging. So from here now, as you can see, this is a major. So support, 618. This is going to be a big, strong resistance zone right here, because you're going to have the decline coming down. You've got the support resistance and you've got the fib 618. Exactly what I just showed you on the uranium chart before, when I said I'll be very surprised if it just gets through first time. Okay, so you can see, and this one rejected the fib 5. So I'll just bring this down a little bit here. Okay, so support became resistance, and the fib 5, fib 618. So perfect example, and then you can see the decline. All right, so this is what's called confluency, where multiple rivers meet. Decline meets horizontal meets fib. There's 3 reasons why they would attack there. Once you then get the pivot, which is here, okay, once you then get the pivot, you go, okay, we had bullish divergence. We got our bounce. What most people don't know is what happens with bullish divergence is, more times than actually not, that bullish divergence will then turn into hidden divergence, or bearish divergence will turn into hidden bullish. Okay, so what actually happened then was the regular bullish, where we've made a new low in price here, but not here, then put in a lower high, but it made a higher high here. So what we have here is what's called regular, which is what most people know divergence as, which is reversal or pause in the market. And then here is what's called hidden, which means continuation in the market. So you've probably seen this as a beginner trader or someone that doesn't know what's really going on. You've seen this little trick divergence and think, and you keep getting wrecked when you're buying the divergence. This is why, because regular turns into hidden. So that bounce, all it does is come back to where the divergence started, which is here, came back to this point, and then it turned to hidden. And now you can see the RSI is reset. We're back up at 50. It's got room to move down, ready for the next move. Okay, so regular into hidden, then it moves into the next move, which you can see was a big drop. All right, so this little tool can be really powerful in helping you predict whether or not it's a bounce or whether it's something further. There were a lot of reasons why the sellers were going to step in there because of the reasons I told you. And then on top of that, it's where the divergence first started coming from here. Okay, so all we did was come back to it and then it continued the trend. What I'm looking at now, however, is remember how I said you're looking for divergence to move into convergence? So can you see how then we came up, put in a new high, and then we broke the new low? Can you see how now the RSI has made a new low? That move there and there is right now doing the same thing, which is converging. Then you can see we've come up and we're putting in a lower high here. Also, we're putting in a lower high. So this is, if this was higher, I'd be like, oh man, the hidden bearish is continuing. But because it's lower, and I just need a little bit more data to probably a little bit more for a pivot, but we're at the zag zone again right now. Okay. So somewhere in here, I want to see it come in and not have a higher high in indicator. All right, pivot here, pivot here. So this is converging, then I need to see what happens. So I'm looking for three things to happen here. I'm looking for it to come here, put in a higher low and change up. And this to go same thing, higher low and change up. And that is where your divergence from regular and hidden turns into convergence here. Here. Then I will take that breakout on energy, which you'll notice will also happen to align with break of the decline, etc. Okay, so that's my most bullish option, that we put in a higher low here, we change up, and then you've changed market structure, which is your reversal, but more importantly, on convergence. Okay, that's my most bullish option. The next option is that we do this, that we put in a double bottom and then come up. But the same thing here, this will come down and still have bullish divergence. Okay, so what I'm looking for is that to come down, price action hit the same level, but this doesn't, puts in a higher low, go, oh, my divergence, this to come up, higher low, that change market structure, this change and move into convergence to confirm the low. That's my medium bullish option. And then the other one is if we do this, is if we come down, make a new low, okay? And then here, the new low happens on bullish divergence, like here. But instead of the regular divergence moving into hidden, what I'll be looking for it to do is this. And I'll delete all that. I want to see it come down, make a new low, come back, reject the zag zone like it always has, put in a higher low and change market structure through. And this would do this, come down, put in bullish divergence, then this come up, put in a higher low and change. And then can you see how that would be bullish divergence? Okay. Then this, where you change your market structure, is here where it moves into convergence. And again, take the long there. Either one, I don't care, because I know how to make money off every single one. So all it's now doing is waiting for the data to unravel to do it. Okay, so that's what I'm waiting for here. I already know on the monthly, I should be looking here, which is why I've hawked in. I already then know on the weekly, if that comes down and does that on the thing, the weekly will also do the same thing in the fact that the weekly will come down and print that high low bullish divergence as well. Okay, so there I just need to then hawk in on the daily to pinpoint the entry. Okay, so again, this is what I like to come in. I like to predict the ways that it can move. And then from there, I've got a plan for every way. I've got a plan if it puts in a high low and I get it. I've got a plan if it puts in a double bottom. I've got a plan if it puts in a new low, but only if I also get to combine it with my confirmation signals. That's the key. What I'd then be looking for is when we have this sag here, whether it's a new low, a higher low, or a double bottom, is where I look at that uranium and go, okay, I know uranium is the leader in the energy space, and that's where I'd be expecting this to happen. Okay. And if I do get that, and I do get that higher low off here and do the same thing, I then, depending on what happened on the energy sector, if it double bottomed or if it made a new low, if uranium made a higher low, that is, and this is not confirming, that is divergence. The leader has put in a higher low when the sector has put in a lower low or a double bottom. Okay, divergence in that one. It's exactly how I got the low on Northern Star back in the day. So if you look here and you have gold over here, over here, we put Northern Star over here, which is the #1 gold stock in Australia. And we're monthly. Let's change that to weekly. Let's change that to weekly. All right. So, and delete that there. So, where are we going back to? All right, so, I'm up here. That's why what am I looking at here? All right, so from here, you can see from this move to this move, you put in a low. Okay, a low in gold here. But if you look at that same level here, okay, so that dot there is that dot there. That new low there is that there. So see how that's a higher low and that's a lower low? Okay, so that's what I'm talking about. Why did gold put in a new low, yet Northern Star put in a higher low and change market structure back through this major support resistance? Okay, because it was a liquidity grab, which you can start to see. You haven't got the volume, has it? OBV. See, you got bullish divergence on your volume going higher while this was going lower. All right, so that's what I'm talking about now on that energy sector is if the sector puts in a new low like gold did here, and then the leader of the sector puts in a higher low, and Northern Star is the leader of the sector in gold, then you've got divergence, and that's something to take care of. All right, so that's why I'm just looking at those things to help confirm. Anyway, let's look at enough education. Let's look at a couple of potential trades and stuff. So a couple of ones that have been playing out well. So weight, which I talked about, has broken out and done a really good job now. Okay, so we've got a nice, beautiful leading diagonal into the zag zone, and now we've moved into wave 3. This is something I talked about in this academy. Okay, so up here, I'll just type in weight, WAA, enter. And you can see here, April 16th, 2025, which was about 20 days ago. And change of market structure after bullish divergence, after leading diagonal. So that could be beginning of wave 3, which is exactly what happened beginning of our wave 3. Okay, so where we've got to now be careful of possible rejection zones. That one. You know, this is the kind of area here, in particular that 618 will probably be a bit of a zone to keep an eye on there because you got the old major resistance support. So, you know, probably expect some sellers to come in around 15, maybe around the 12, but probably not until the 15. And then what you'd want to see is, yeah, them come in, put in a higher low, and then change up through there. We need to get above this one because how do we know we're not just going zig, zag, and continue? So until we get above that 22.5, we've got to be careful that it's not still the beginning of something else. But yeah, this was one that I talked about on YouTube last year. I've put in Facebook and then alerted in the academy just recently as well. So yeah, that one's been an absolute cracker, doing really well. Gore. So Gore, I was yelling from the rooftops back here after this big, massive consolidation on this breakout of $2. It's now had a takeover bid at $3.40, which is a nice 60% up from the breakout. You know, can't complain. In like October, 6 months time, 60%. You're never going to complain about that. But what I am complaining about is the fact that I wanted that in my long-term gold producer because it was one of my favorite gold mid-tiers, and now it's been taken. Exactly the same thing happened to Silver Lake too. Silver Lake was bought out by Red. They turned into VAU, and I didn't want that. I wanted Silver Lake by itself. It was a good mid-tier producer as well. But anyway, it is what it is. You can't do anything about it. So anyway, nice win there. We ended up getting the 60% payout. I've kept it in the long term because right now it's 325, but the buyout's 340. Which is here. Trading account, I've just sold it because by the time you actually do it and the change is over, you're looking at probably weeks. And for me to have dead money for weeks to make 5%, it's not worth it. So I've sold it in the trading account. I've kept it in the long term because waiting a few weeks to make 5% in the long term is worth it. So because I'm not as active in that. So yeah, that's the plan that I've done on that. I've sold the trading account because I can now have that capital working for me, and somewhere else, and the long term I'm just sitting on it, letting it go. Looking at the gold miners, so if we look at our GDX here, they're still very bullish. Okay, so as you see, higher high, higher low, higher high, higher low, higher high, and we want to see this resistance flip back to support here. This is where I'm looking for the buyers to step in here. Okay, which they have at the moment. Fit 500 here. So what I don't want to see is this. This is where they're supposed to step in. It's okay if it does this, if it comes up, bounce out and does that and goes, because then you just come back and retest in. What I don't want to see is see it change microstructure back below this low. That's where then I'd be like, well, hang on, we've broken this resistance. It should act as support. We're no longer buying higher. You know, if it does that, it's still buying high. That's fine. That's kind of what I'm expecting. That, you know, a bit more correction on gold till probably, that June, July from there. And then we'll see. I'm not expecting it just to low and go. It might. So yeah, still holding swing account. Don't have any in the short-term trading. I actually rotated from one of my gold miners into DYL. So I talked about capital rotation. And I just really want to talk about this trade right here. So I've just exited, and this is April 24th. So you're looking at, two weeks ago. I exited my NEM trade. So I was in a good gold producer. You can see I'm up here 33%. And then from there, I'm now rotating my capital into DYL. For me, the decision is about risk to reward. At this point, I see more risk than reward in remaining in NEM for the short term. In contrast, DYL presents a setup where the reward far outweighs the risk. I'm always looking for when I trade. It's important to remember when you take profit that capital doesn't go to sleep. It's not dead money. Instead, you rotate into the next best opportunity. That's exactly what I'm doing here, keeping capital active, purposeful, and always chasing the highest probability. So what you've always got to remember is every day you're holding it, you're essentially saying you would buy it today. Okay, so me with NEM, what I had done was I had entered my trade, which was back here on the change in market structure, back through support, and then I'm up the whatever it was. I'm up the 30%. I'm in at 63, and I'm out at thingo. All right. So when I was up here, which is when I took profit the 2 weeks ago, I've then got to go, okay. And again, this is my trading account, not my long term. I'm looking at this going, we're at major resistance. Gold was extended back then. I talked about on Facebook that the local top was in, seeing a pullback in gold anyway. Okay. From there, that position NEM is now down like 9%. And in that same date, in that 20 that's when I went into DYL, which is when DYL was at $1. So I'm down 9% now on that one. And then I'm up on this one. So I got in at the dollar, which is about here. And I'm now up, say 22%. Okay, so what that means is, and this is what people don't get, by selling NEM and going into DYL, I'm not up 22%. I'm up 31%, because what I did was I dodged a 9% loss and I gained a 21% loss. So I'm now up 32, whatever it is, 31, 32%, not 21, because you dodged a 10% pullback as well. You know, people forget about that when they're very happy to always think about the money they missed out on, but not the money that they missed out on losing, which then, you know, it's always about outperforming. And from that moment, there was a lot more evidence of me underperforming in NEM than there was in DYL in that short-term trade, which is why I rotated the capital. And how did I use data to confirm that? I put it in the charts. Okay, I went, okay, NEM, and let's do the ASX one. So ASX NEM / ASX DYL. Put in my little ratio, enter. And we were back. I can't do thingo on a ratio, but I'm looking at this here. And this is my ratio right now. Okay. I was looking at the weekly. And, you know, this was 2 weeks ago. So we were right here. Right there. Okay. I want to show you what I was then seeing. Higher, high, high, low, high, high. It's all good in an uptrend. But in the short term, what I was seeing was this. We were overbought on bearish divergence. Right there. So then I was like, well, my ratio of NEM against DYL is going, you know what? I'm really overextended. They're going to at least get a pullback to the zag zone, which is exactly what happened. Okay, we're on the 618 now. That, you know, so that was it. So then that's what happened. We pulled back. I was overbought. So my data was also telling me, yeah, mate, you've got more chance of making money in DYL than NEM right now, because this one's really extended up here as well. Okay, ratio analysis, relative strength, really unpacking where the trades will be. A lot of people go, you know, the problem is they break up with their girlfriend and they're stalking them on social media every day afterwards, and they're taunting themselves. They're haunting. Instead of then just moving on to the next best thing, you broke up that person for a reason. It wasn't giving you what you needed anymore. So I broke up with them because it wasn't going to give me what I needed anymore. See you later. I don't need to look at them anymore. Okay, I'm now all eyes on DYL, because there were qualities in DYL that I'm interested in now, and that's where I'm sticking. Okay, but what most people do is they, even though they're with DYL, they keep looking back at their ex-girlfriend here at them going, what are they up to today? Okay, you need to shut it off, block them on social media, move on. Don't taunt yourself. Don't, because people will always remember the one that got away. It can keep going. I don't care, because I'm trading. It's in my trading account, not my investing account. It did its job. It made me money. Now DYL is doing its job. It's making me money. I'm very happy to swap DYL for the next thing that's going to make me money. Okay. You've got to not get an emotional attachment to tickers and just go, is this going to make me money over the next couple of weeks? And if it's not, then why are you holding it? All right. Is there something better with better opportunity, and doing it that way as well? NVX is one that I'm still waiting for the confirmation to get through on this one. So here I talked about zag zone here. You can see we're rejecting the 618. Okay, that's exactly where the sellers should step in. But what I needed to do now is put in a higher low and go up through, because what I want to see is this. Okay, I want to see, I've got my bullish divergence. I've got it on the OBV as well, same thing. That should be my liquidity grab. Buying, I want to see buying, liquidity grab, change in market structure through. So once we do this, high low, get up through that 47, then we're changing market structure through a falling wedge. And this is where things get exciting. Probably wondering, well, why didn't I wait for it? Because it gave me a really good R&R here. I got in on the 40. I was able to have a pivot below there. So it gave me a really good tight stop loss, which is rare on something as small as NVX, and knowing the upside, it'll give me a phenomenal R&R. Like even me getting back to here, which I believe it can go higher than that. You know, I'm looking at from that breakout, stop loss below, you know, a 16-to-1 trade just for that, which I believe it can actually go further than that. So that's why. Whereas if I waited, and again, I didn't know if this also, sometimes it doesn't reject the zag, sometimes it keeps going as well. But if I'm waiting for this one, you know, you're looking at kind of a 5-to-1, you know, so I've now got 3 times 1/3 less profit than the other way. So anyway, that's what I'm looking at. That's exactly, you probably saw my trades on crypto that I did recently. These ones here, like I said, I hadn't touched crypto the whole year. First time buying there, and you know, these trades here like 1,000%, SUI 1,300%, near 1,000%. I'll show you the exact same thing that's probably happening on NVX now that happened on SUI and why I took that trade. It's just the exact same setup. So going here, I'm now going to go to SUI. All right, and I'll bring it back to what I was saying. All right, as you can see, very clear. I'm just going to get rid of all indicators. Very clear downtrend. Down. Okay. But what I'd noticed is when we go here, all right, see how we've got now a change of market structure. Okay. So let's unpack what it's done. So here, so this is just your zigging, your zagging. So here, can you see how it rejected the 618, just like NVX is doing right now? So maybe I'll pull up NVX on the other side, you can see. I've got to let it. I'm on the weekly, sorry. All right, it's the exact same thing. NVX is rejecting the 618 like I showed you, okay, here. But then what happened was the buyers stepped in off the zag zone going this way. Okay, see, 382,618. That's what we're looking for here. Buyers stepping in here. And then when it comes up and changes market structure through, that's where then we can confirm the low. Also, you'll notice it was through a break of decline like this one will be as well. Okay, change of market structure like this one will be as well. Then can you see here how you had buyers step in. What's this? Why does that exist? To me, it looks like a liquidity grab because they're buying, they're not, then they're buying there again. What's that? Purpose of that liquidity grab. I then go, so that's what I'm looking for here as well. So buyers coming in. What's the purpose of this? Liquidity grab. So then I'm going to go, this price action is telling me that's a liquidity grab. I'm then going to go into my indicators to confirm it. And I can see bullish divergence. Okay, beautiful. That then moved into convergence. See, perfect. I'm going to bring up my OBV. Same thing. New low, higher low, bullish divergence on OBV. This is what I've got here. New low, higher low, higher low. So now all I'm doing is waiting for it to go into convergence. So there, change up. There, change up. And then see how it's not hidden bearish because new low, new low. This was up here. I'd worry about, oh, continuation of the trend like it had here. Higher, lower. But now we're not getting it. So again, you're starting to see a couple little gold nuggets and things that you've seen throughout all the different ones. And then you can see that then shot up, and that's how I got that 1,300% up from there. but it's exactly what I'm seeing now on NVX. Same thing. If we can have buyers, my stop is still under here because my whole reason for being in is, like I said, it's this setup, it's my bread and butter. I trade that setup all the time. Got my double blinkers, just like here. This should be my liquidity grab. All right, so I need to see buyers come back in here. That will confirm that liquidity grab, and then break, change your market structure, go from divergence into convergence. Voila, we make money. All right, hope you liked the video, guys. If you did, please like and subscribe. And